Hey, welcome to the Options Millionaire podcast. I am Kremlin. I am joined here with my host, Mr. Options Millionaire himself. This is episode one, and we're going to be talking about finance, which I bet is something you've probably been hearing about recently, especially very recently. Uh, Personally, I can say that being a young man and going out to bars and such, you pass by groups of women and they say something like, "Hey, why are guys all into stocks now?" And that's something I noticed too. It can be anywhere from sort of upstanding people that are just sort of foregoing the managed portfolios and 401ks and picking out their own tickers, and all the way to people that download Robinhood and buy options without knowing what they are. So it's certainly an interesting time. Wouldn't you agree?
Absolutely. Absolutely. Yeah. The whole explosion into personal finance this past, I don't know, 3 to 6 months has been absolutely unbelievable. It's kind of been like a double layer here because we had one of the Corona market, which kind of brought a lot of people into it. And then this Wall Street bets GameStop explosion just kind of put the cherry on top, just added so much more influx of young investors. And it's been awesome. It's been awesome to see everything explode on social media and frankly, throughout the whole country of just influx of youth coming into the market, and it's changed the game. It's changed the game. So it's been pretty awesome.
Yeah,
For sure. It's been pretty awesome.
it's been very interesting. And you mentioned one specific thing there at GameStop. And to me, I think that was the biggest draw for at least the millennial crowd. At least people heard about all this sort of stuff going on with GameStop and to a lesser degree AMC. And associated with that ticker and that company and that situation that happened earlier this year is a community of people online, a certain subreddit. I think you might know what I'm talking about.
Yeah. Famous Wall Street bets. Wall Street bets. Man, the whole GameStop thing is something that I was looking at in pure astonishment at the time it was happening. Because no one in the world could have predicted that thing was going to what, 500. I think at one point it did print 500. Just crazy stuff. So, but the great thing is that all that volatility, all that craziness out of Wall Street bets formed a whole, this whole influx, which has been pretty awesome. But yeah, the good old Wall Street bets Reddit page that everyone seems to be talking about. I think it went from 900,000 people to 10 million or 9 million. Seemingly overnight, what all this stuff happens. So
Yes.
a very cool thing to happen, like a social revolution in terms of investing. So very, very cool to see.
It is cool how it did bring in a very young crowd, but when I take a look at your community versus WASP, I see some differences that maybe you can help me articulate here.
Yep. And that's kind of a conversation that leads into why I'm actually sitting in this chair talking to you all right now, because the GameStop thing that, I guess the Wall Street bets thing that, they were at one time a very respectable Reddit community, from what I could tell. I never saw them prior to the GameStop thing. So, from my research and talking to other people, it's like, hey, has it always been like this? Because I tried to get into Wall Street bets before, I became OM. I tried to get into Wall Street bets and talk and teach people there. And, I kept getting rejected. It's because every time I looked through there, it was, cheerleading and YOLOing and a bunch of nonsense about bragging about, hey, diamond hands, I'm down 80%. I'm down, 1.2 million. I'm down 300,000 because I'm holding on to this. I was like, this is insane.
Yes.
It's like, why are people holding on to a losing position when they're up, 400 or 500%, 600, sometimes like one time 10,000% gains? Why are you holding on to these positions? Like, it just, from an investor side, it just didn't make any sense to me. And I'm going through there, so I'm trying to help people, and I keep getting rejected, like left and right. Every time I would post something, I was like, man, this is great information. I'm going to help some people. I get an email, reject, or removed. Your comment's been removed, and finally, eventually, I was like, I was muted for 30 days. I was like, this is a bunch of garbage. Like, every time I went through there was someone with like 20,000 upvotes and like 4,000 comments. That all it was, hey, I YOLO'd my entire portfolio. Now I'm down 96%. And all I'm sitting there thinking is like, who in their right mind thought that a $4 stock would race to 500 and stay there, or go to 1,000? And there's people buying it $400 and $500 levels. It's like, there's got to be some education, because you've got these young crowds coming into the market with their money, their parents' money, wherever this money is coming from, and they're just throwing it at GameStop, thinking that they're going to make what DFV made, that 46 million or 50, whatever he topped out at, some crazy, crazy dollar amount, once in a lifetime win. And these people are wanting to do the same thing. And it's like, it doesn't work like that. They don't understand that GameStop is a complete anomaly and it'll never happen again. They'll never allow that stuff to happen again.
Yeah, it's almost like they come to expect it. And, I think as this podcast series continues, the audience will get the idea that we're trying to drive here, that when it comes to this sort of stuff, your biggest enemy is yourself, right? Your own human predilections and intuitions will, if left unchecked, will not help you.
Yeah. Oh,
And,
yeah.
a great example of this is nobody wants to realize a loss. If you're down 97% and you haven't closed, well, maybe it'll go back up. You
Yeah.
can sort of pretend like it isn't. And that sentiment, I feel, and a number of other ones, a number of sort of, I would say, immature and short-sighted sentiments are associated with the whole Wall Street bets. When, at least in my journey, I felt much better going from sort of that sort of community to something a little bit more professional that says, hey, we're not leveraging 100% of our portfolio into one crazy play. You know what I mean?
Yeah, yeah, absolutely. And you touched on a great point there about talking about emotions, because everybody wants to Google the magic bullet, the crystal ball investing. Like, how do I get that indicator? How do I get that particular thing that's going to make me millions? That's going to make me, never lose. And it's like, well, that's just not realistic. One, you're going to lose. It doesn't matter who you are. I mean, even Warren Buffett takes losses. But my point is that the emotional side of trading is, in my opinion, more important than the technical side of trading. Because you can have the best system in the world, but if you are incapable of managing your emotions, you're going to get smoked. You're not, 10 times out of 10, you're going to get smoked, because the second things don't go in your direction, you're not going to think clearly, or you're going to hold on to a position and you're going to find yourself in a 40, 50, 60% loss. And you don't know how to get out of it because you can't manage your emotions. And especially these young kids who never experience financial loss before. They've never, had money. They've never worked hard to gain a certain amount and then lose it all in life. Life smacks you down left and right. And the market just amplifies that in a very short time frame. There's very few places outside of the stock market that you can lose $100,000 in 2 days. And the market can do that. And the market will do that. It doesn't matter if you're 18 years old or 60 years old. And these kids will realize that when they come into the markets, at 18 years old. And that's the problem. And, like you saw that example of that kid off Robinhood who, I think committed suicide because he lost a great deal of money. So it's crazy stuff, that the emotions that are brought into the market. So, and that's why when the Options Millionaire room started, the Reddit started, like, I wanted to make this the anti-WSB. And that's not necessarily a jab at WSB. It's just the fact that I wanted these kids to have a realistic platform to come to and learn that's an actual real investing thing, that they can learn how to do this properly without having to be worried about not only a bunch of garbage being shoved in their face, but also not trying to be sold a product. Like, I don't want to sell them a product. I don't want to have to feel pressure to put their education aside in order to buy a product. So, and that's where I am now.
Yeah. I think the system that you have right now, at least, is very, very interesting, because people sort of set up a dichotomy where they look at, okay, well, you have two schools of thought. You have the WSB school of thought, where it's massive risk, low chance of success, but, huge returns of success, many, many multi-baggers. Or you have the classic Warren Buffett approach, where you just, buy blue chip, wait for decades, and then you're rich. But I do think that there's a dichotomy. I do think that there is this pathway for people to have significant returns, huge returns, without necessarily betting the farm or over leveraging or, having too big of a position size.
Awesome.
Yeah.
For sure. That's the thing that even I, have to try to explain to people, because they're like, oh, you only have 8% today, or you only made 4% today on your trade. It's like, you have to think, like, if you outside, I guess prior to all this stuff, if you were to tell someone that you're making 5 to 8% a day on your picks, that's incredible. You have to realize that 5 to 8% return is
Unheard
incredible.
of.
It's unheard of. Yeah. So it's like you go to a bank and say, hey, I've got 8% every day. You go to anybody that's even halfway savvy with money and cash management, and they say, hey, I can make you 8% every day on a small, at least on a position on or a portion of your cash. Absolutely. I'm giving you my money. But now we've been so desensitized for the smaller wins because we see the social media and Wall Street bets are throwing, 100% wins, 4,000% wins, 50% wins all the time. That's just not realistic. And you've got a bunch of kids that, you could fake screenshots all day long, throwing that stuff up there. And, the whole premise behind social media is look at me, look at me, look at me. And it's just not realistic. So, that's the system that I want to portray. I want people to come in here and realize that I'll take 8% all day, every day. And, one, if I can take my 8% win and take stress off the table and make my personal, emotional life better and not have to worry about other positions, I'm all about it. If I, and if I get to the 20, 30, 40, 50% gain, great. That's just cherry on top. But I'm taking 8 to 10, 12% all day long. I will take it all day long. And I have no problem taking a 5% win. It's a win to me. It's happy. It's my money's going up. My equity's going up. I didn't take a loss. My stress is managed. And to me, that's a win. And that's what I'm trying to get these young kids to realize is that if you can manage your emotions and manage your system and put together something that's profitable and consistent, you got a winning formula that's going to last you generations.
Yeah, and back to what you were saying about the 2, 5, 8, 10% daily returns. It makes me think about my grandfather, who was a World War II veteran, and I
Oh,
think
cool.
in his childhood he was a member of, or he was he survived through the Great Depression basically, and a side effect was that he didn't really trust banks, and he had a lot of his money put into war bonds, which when he passed away I inherited. And you look at these war bonds, and it's like, okay, they're $100 face value, and they mature to like 115 or 120, over the course of decades.
Yeah.
You know what I mean?
Yeah.
It makes those daily 2, 5, 10%. It puts into picture just how substantial they are.
Yeah, you make a great point. The small, like I guess the less riskier investments like that, like bonds and CDs, that these kids don't necessarily touch about. I mean, you nailed it right on the head. So, these kids are so used to seeing the high end stuff, the high profile, the high profitable stuff, that they don't look to the smaller stuff. They don't look to a consistent, repeatable program, because you can't sling 30% every day. It's just not feasible. I mean, the best traders in the world are managing 20% a year on their portfolios. So you have to realize they don't put anything in perspective. And you made a great point. So there is no more bonds. Like, people don't talk about bonds anymore because it's not sexy. You don't get the big percentage numbers.
Yep. And let's hope it stays that way. Let's hope those 10 years don't don't get too high.
Yeah. Oh yeah. Yeah. That was, it's funny about that, segue there, that, the market rolled out the 10 years as a problem child back in March. And, every time the 10-year fluctuated like 0.01% or 1%, the whole market would freak out and go down. Everyone's like, oh, the 10 years went up. Well, no one's even mentioned that in over a month now. It drove me nuts, because, like, why are people putting so much emphasis on the 10-year, and then the next day they wouldn't even talk about it, even though it's moved more than it moved yesterday? But no, because since the price action is not solidifying their basis on what they were talking about, they just let it go. So the market just rolls out the 10-year and like shows it to everybody when they want to, and then they put it back in behind the curtains. Yeah. So it's, anyway, the 10 years, to me, it's overblown in the terms of market effect.
Yeah, and as we delve more into your system and exactly how it works, we'll get into more about what general market climate we need to look at to know what to do with our trades. And I think the 10 years is a good example of something that is one of those things you sort of have to keep at the periphery and at least know the social sentiment of it. But we're getting kind of ahead of ourselves. This is episode 1. This is not the episode that we're going to go in great detail what your system is, but to give a general synopsis of it. And what I'll do is I'll give my take of it, and then I'll ask you if that's reasonable and if you have anything to add. But right now, we're in a very interesting economic time. The economy physically is pretty suppressed with COVID. People are out of work.
Sure.
And it's being inflated by expansionary monetary policy on the part of the Federal Reserve.
Yep.
Mr. Jerome Powell purchasing securities, keeping the federal funds rate low.
JPAL, JPAL,
JPOW, yeah. Uh, so with things, with the S&P hitting 4,200 at one point, uh, no one really, or at least I don't. I'm expecting some pullback, correction, recession, whatever you want to call it. This is not the kind of market I want to keep holding things overnight.
yes,
So
yes,
when we take a look at your system, and I'll just give you a very basic outline of it, it's doing intraday, buying to open and then selling to close. Options with single digit days till expiration on SPY, the ETF that tracks the S&P 500 pretty closely. Traded in huge volume. I think the most traded ticker, full stop.
yep, yep,
Looking at many, many different indicators, looking at many, many different sources of information. If I were to ask you, I think your classic response is I look at everything, right?
yeah, yeah, yeah,
Yep. Buying and closing intraday, and taking those single digit returns as they come.
for sure, yeah,
Not holding overnight, not having that anxiety.
yep. Managing risk to the best of my ability. That's the whole name of the game here. So, you know, basically what I used to do, and I think what everyone pretty much does, is they buy a position, they hold it long term, or a day trader kind of blurs the lines between a swing trader and a long term investor. They don't really know what they're doing, or know necessarily how they identify. And I was one of those too, man. I traded everything under the sun. I would do everything in terms of stocks and ETFs, and I got to the point where I just, you know, I wanted to take risk off the table, and I wanted to take time off the table. I didn't want to sit in front of a computer all day. And then, touching on what you said about the market here, is that we're in this huge expansionary monetary policy, but we're in such a risky area right now. This risk off buying that people have been doing the past, 13, 14 months now, it's coming to an end, and it's going to be ugly. So right now, basically what the whole sentiment was is that you buy a call or you long a position, and then you just wait 24 hours and sell it, and then you make money. Yay! It's just happy, and there's been virtually no real analysis except for stonks only go up. You see that meme going around all the time that stonks going up, and it's like, yeah, it's great, grand, and wonderful, and I made money on it. Everyone made money on it, it seems, but that's coming to an end, and this is not real market mechanics, and people are finding that out. So with my system, I wanted something that is going to completely take risk off the table and help me sleep at night. And that's what I developed. So I hold nothing overnight because I want full control over what's going to happen the next day. And when you put when you put your money in the hands of SPY or the market in general and let it flow overnight, in these market conditions, you don't really know what's going to happen. Like, look what happened look what happened yesterday. The market was, pretty red all morning and finally started recovering into the afternoon. But a
Yes, I
lot of people,
recall.
yeah, a lot of people's calls took a hit because you're just holding over the weekend. So now you're fighting theta and you're fighting the market being down. So it's a double whammy. It's a double whammy, and that's what I wanted to avoid with my system.
Yep. And I think it's important to identify a couple of key things that make this system feasible, right? So, I'll just come from a bit of my background. I was pretty long speculative tech stocks. You look at the ARK family or of ETFs, and you know what Kathy sort of invested in. Those are the sort of things that I would be putting my money into, and that worked for a while until it didn't.
Sure. Yeah.
And what's different, I think, with SPY specifically is a couple of things. Firstly, you're you are making plays against the general economy as a whole. It doesn't matter if one ticker or one constituent of the S&P 500 does bad. You're not relying on you know to give an oppositional point. If you were doing the same thing on a single ticker, a single company, you're subject to all the risks that company brings. Itself, they could have a security breach, and
Hmm.
you wouldn't be able to play against that. There's a high risk of just sudden events that can make a dramatic move. And when you're playing against the S&P 500 as a whole, that risk is sort of generalized, and your predictions about how you think the market is generally going to go is going to fit that model much better. Your risk is spread out between 500, in fact, very, very large companies, and that sort of mitigates how how bad one singular event could the damage that it could cause your positions.
Yeah, for
The other
sure.
thing is that the SPY specifically, massively traded, huge volume every single day. The options market is similarly huge and voluminous, and you see, and I think this is the most critical point, penny spreads.
Yeah, yeah, yeah. Penny spreads are my jam, man. I love it. I love it. So, the liquidity in SPY is, I mean, one of the 10 or 15 reasons why I love SPY. It's why it's fantastic. Is because liquidity. You never ever have to worry. I've never pretty much had a position size where I had to worry about getting out of it, because SPY you can just you hit sell and it fills the order because there's such high liquidity. But yeah, it's awesome. Been trading this has been the easiest and less riskiest system I've ever played, because SPY absorbs market risk. Like, you made a great point. Like, when I was trading Tesla, especially in the later half of 2020, like going into December and November, when I was still trading Tesla, I did very well with Tesla. But in the last half, it was just crazy. Like, it was unpredictable. It was volatile, and it got to the point where my bearish bias started fighting my trend, and I want to get out. And like with SPY, I don't necessarily have that, because I can just play the day that it comes up. And like, if Tesla tanks for some reason or another, if Elon posts a crazy tweet and the whole Tesla tanks, it's not going to affect SPY. If the whole FANG tanks, it may affect SPY, but if just Tesla's tanks, it's not going to affect SPY.
Yeah, it'll maybe move the needle a little bit, but it's like I was saying, you're taking indicators that sort of express a general market sentiment, and you're applying it to a ticker that deals with the general market.
Yeah,
It kind
yeah.
of goes hand in hand.
For sure, for sure. Yeah, yeah, yeah. That's what I love about it, man. It cuts out all the noise, all the noise. So I still use my watch list to gauge sentiment, which I'm sure all of y'all know. And then so I've got on my watch list here, when I come up, I've got all FANG, I've got all of the XLB, XLE, and XLF sectors, which is materials, energy, and finance. I've got all the other ETFs like QQQ, and then of course I've got the futures and stuff. So it gives me a good gauge of market sentiment, but like cutting out all that noise and not having to worry about all those charts and trading just one thing that's absorbed risk of the market. It's got 500 other stocks in there. It's been the less riskiest, easiest trading I've ever done in my life. And I say easy lightly, because I say it's the easiest. Doesn't mean it's easy. It's the easiest I've ever traded in my entire life, my entire trading career. So just because I get to focus on one thing and something that's very liquid, it's very voluminous. There's no problem in getting it out of position and getting the contracts that I want.
Yep. And as we record more and more episodes, we can get really heavy into what exactly trading this system, on the ground it looks like, right? But that to me seems like something that we might be talking about more in the future.
Yeah.
Right now, I kind of want to cover basically. Let's get into why we're doing, or I should say, why you're doing this, why you started this community, what your intentions are, and but more specifically, we should probably say some disclaimers here, right?
Okay. Yeah.
So, me and my co-hosts are, I'm going to give you the very, very stock standard. This is not financial advice. I'm not a financial advisor. Blah 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 blah. I'm sure you've all heard that, but beyond that. We're just trying to share our knowledge. Mr. OM here is just trying to share his knowledge. We're not trying to, if you listen to some other podcasts, you'll hear them use it as an advertising vehicle for some service or some back testing routines that they're trying to sell. We have no interest in doing that. We have no interest in trying to take your money. We have our own way of getting money, actually. You might be able to take a guess as to what it is, but
Yeah.
it makes these other sort of things redundant. So, yeah, why don't you talk a little bit about
Yeah. So
what your raison d'etre for doing this is?
for sure. Yeah. Yeah. My whole thing is I don't want to charge anybody for this material. I'm not looking to make a buck off an 18-year-old trying to learn about investing. So I wanted to teach the whole plethora of people, that the influx of people that we have here, how to do this trading and how to do investing and how to do it properly. So I'm not looking to get money out of anybody. I do have the Patreon set up for those who do want to support the community, but I'm not looking to hawk anything. I'm not looking to push a product. I don't want people coming to the Discord worrying about a fee or the fact that they got to pay $199 for this month, and then yet they lose a trade. Now they're double. It's like I don't want to do that. So that's why I made the Discord free and all my social media free and all of my educational content free. So you can come in with a clean slate. You don't have to worry about paying anything, and you can make money and learn how to do it properly. So that's my whole thing. Is I just want everyone to learn and how to do this right.
Yep, and so if you're listening to this podcast, you may not be aware. I would say that the most central hub of activity for the OM community would be on Discord, which you can find a link on the subreddit that is reddit.com/r/ Options Millionaire?
Yep.
And then second to that would probably be your YouTube page, which is the same name, Options Millionaire on YouTube.
Yep. Options Millionaire.
And from the subreddit, you can easily find yourself to the Discord where Mr. OM posts his plays as they happen during the trading day. And of course, you usually do a pre-market video as well as sometimes a stream throughout the trading day, usually probably further in the morning. But it's just to give you all an idea, in case you're listening to this, you just decided to pick a random financial podcast on your phone. Those places are where we live and where you can go to get deeper into this.
Yeah, definitely. I post most of my plays or all my plays and most of my strategy thoughts here on all the social media accounts. So it's an awesome place if you do want to get to know the system and to get to know a little bit about me and what I do and how I do it. It's a great place to join, especially the Discord. Get on that Discord. There's a wealth of information there, not only from me, but from a lot of people that are a lot smarter than me. And you get to learn a little something about trading and how basically like market sentiment works and how market emotions work.
Yep, and I think also on top of that, it's I spent a lot of time in different trading communities, and the OM community is a bit more professional. It's a bit more, I shouldn't say professional. It's a bit more adult.
Sure.
A little bit more. I don't want to say like a stiff collar, but this trading activity is substantial and serious, and it has a big impact on your life if you're trading a substantial amount of money. And I think people should treat that with the same level of respect they do, where they're discussing it, if that makes any sense.
For sure. And my whole thing behind my Discord being, I guess, quote unquote professional, is that I want them to control their emotions. Because just like you don't want to freak out when you have a loss, and you want to control your emotions on the downside, you want to control your emotions on the upside too. If you're getting euphoric over a win, that means you're going to get depressed over a loss, and you always want to be even keel.
Yeah,
and that's the kind of sentiment I want to roll in the Discord. Is that just keep it in that level, make your plays, make a win, learn from your wins, learn from your losses, and move forward. Have a very short attention span in this market, and that's the kind of theory I want to push in the Discord.
Yep. And on top of that, like you said, if you win really, really big, if you win really big a couple of times, you're going to stop feeling things. And if you stop feeling things, you're going to start losing. Or, if you do happen to start losing money, you will also not feel anything. And that can be very dangerous. That's something I've found, it's definitely difficult to remove your emotions from this, but
it's very difficult. I still try, I still struggle with it every day.
Yeah.
To remove your emotions. Once you get euphoric and you get those wins, get a couple wins under your belt, and you start getting overconfident, the market will take its hand, put it right in your pocket, and take it all right out. It'll take your money right out of your pocket. So, you got to protect it. And that's why I always say all the time, you got to protect your gains. You got to protect your win rate. With all, you got to pull out the stops. And people don't really understand that until they get waylaid. They get confident, they get cocky, and they start buy or taking bad setups, and the market like, nope, sorry, we're taking this money right back because you're not being smart, you're not respecting me, and they'll take the money right back.
Yep. Well, I think that is a pretty good introduction, at least a good episode 1 for the OM podcast. Again, I'm Kremlin, and I'm joined with my co-host, Mr. Options Millionaire himself.
Good to be here.
Yeah. And I think we're probably good to call it a wrap on episode 1, huh?
Yeah. Let's do that. Yeah, it's definitely.
Cool.